Welcome to the Top Trader interview series with best-selling author and trader Matt Kirk from TopTraderThinking.com. Joining Matt is author, trader and educator Guy Bower to share tips and techniques on spread trading. Having personally managed in excess of $40 million for private clients and provided trading advice to over 2,000 beginner investors, Guy has written more than 240 articles on trading strategy and risk management. He is the author of Hedging, Simple Strategies for Protecting Profits, and Options, a complete guide for investors and traders. As founder of GuyBower.com, he provides spread trading recommendations through his association with licensed trading advisor Matt Kirk.
Hi, I'm Matt Kirk from TopTraderThinking.com, and today I'm chatting with Guy Bower from GuyBower.com regarding trading spreads in the market. So welcome, Guy. Can you tell our viewers what are spreads?
There are various types of spreads. The spreads that I look at in particular are trading futures spreads, which involve simultaneous purchase and sale of two related contracts.
Would you say it's an easier way of trading than trading, say, outright futures, for instance?
It's not necessarily easier. It can be a little easier. It's certainly less stress because spreads don't tend to move as much as outright futures contracts. But it's not necessarily easier. It's more a different way of trading. I kind of think of it like a treasure hunt spread trading, that I kind of I'll sift through the markets, go through 20 different markets looking for the right little trade. One will pop up and I'll sit on it for a couple of months and it'll turn out quite well.
Yeah. And the margining process, so I hear that the margins are a little bit cheaper.
Well, that's actually one reason people do get into spreads, because the margins are significantly lower. It's a reason why a lot of floor traders out of Chicago, for example, trade spreads, and a lot of smaller traders that don't have a great deal of capital to start with get into trading spreads.
Yeah, exactly. So I guess a trader who is new to the market potentially and also has a smaller account, these are favourable. I guess everyone's familiar with trading outright either stock positions or futures. Spread trading has been around for a long time, obviously, but for what reason do you think is it not that popular with retail traders?
It is odd because it has been around for a long time. It's been around as long as markets itself. It's not overly popular, but I do wonder why, because I think it is a great way to get into trading. It does have lower risk, it does have lower margins, and longer term positions. You're not having to watch each tick of the market go up, down, bid-ask changing, so all of that. It's something that you can do spending a couple of minutes a day looking at markets rather than having to sit in front of your trading platform. So it is a good way to get into trading, especially for newcomers. And there is some good information available on spreads. There aren't thousands of books written on it, such as would be technical analysis. But you can find books on Amazon about spread trading, and my site, GuyBower.com, has a whole bunch of free articles and ebooks on spread trading as well.
How do you do it? Based on seasonals, technicals, fundamentals? What do you use to identify a trade?
Yeah, I use a mix of all three. I do use seasonal data. I have a couple of seasonal data databases which I again scan through markets looking for trades. Also use technicals and also like fundamental reasoning behind a trade. So I kind of try and line up all three.
Yeah.
And then make sure I have good reasons for each trade, and then take the trade.
Live data? Yeah. You probably don't really need live data for spreads.
Not really, no. It depends what type of spread trading you're doing. But for example, the type of spread trading I do, I'll have positions that'll last for a couple of months,
right.
And I'll check the prices every single day to make sure things are okay. But you don't need live data, you don't need detailed trading platforms or anything like that. You just need access to the prices, which you can get free online.
And managing stops, for instance, how would you do that?
Generally as an end-of-day basis. So stops, I'll set stops and watch the markets each day and move stops if need be, but always manage stops on an end-of-day basis. Spreads on an intraday basis in some markets can move around a little bit due to illiquidity of some contracts, but on an end-of-day basis I think is the best way of managing stops and managing risk overall.
Yeah. So once again, certainly for a new trader or with a small account, sounds like a great product. And finally, the top three techniques or things that a new trader or a new person to spreads would need to look at?
I think patience is one. If you're the type of person that wants to trade intraday for the excitement of it, spread trading is probably not for you. Although there are spread traders that do trade intraday, but that's again a different type of technique. And just to understand the risk associated with, that's a kind of very general statement, understand the risk associated with trading. But just to understand the relationships between different markets, why does a treasury bond move versus when the dollar moves and that type of thing. So you start to understand, that comes in time, that comes with experience, but you do have to understand those relationships to put on a spread trade.
Yep, excellent. Well, thanks, Guy. Look, have a look. Check out guybower.com if you want to know more information about spreads. There's a massive amount of free stuff there for you, so that's great. So thanks for joining me today, Guy, and happy spread trading.
Thank you very much.
Bye.